Okay, here's the ultimate guide to order flow trading. Let's take a look at this trade I took earlier today. I'm going to tape read you through this. Okay, here we have a continuation trade. This is how you use order flow to qualify your trade. So rule number one, step number one, you need this little arrow. See this arrow right here? You need a breach or a reach of a structure level. Okay, if you've got a structure level, I've got two of them right here that just got ripped through on this swift 20-point S&P move up here. You can see it has considerable delta, 3166, 2349, and 2996, almost 9,000 more buyers than sellers in this move. Contracts that went off on the aggressive buying side right through this 20-point move. Okay, and it ripped through prior day high and a weekly high that we have marked on our charts considerably. Okay, that's rule number one. Rule number two, you need a pullback. And this is for a continuation trade, by the way. You need a pullback. Okay, so now we have this big, massive delta move up. Now we have this rotation coming back down that pulled back to about halfway through, or halfway back through that move. So about a 10-point drop back down. Okay, and now we can confirm with a few tools with this EMA cloud here. We're pulling back into a bullish EMA cloud. We crossed the 9 EMA moving average, and then we had a nice key signal bar shed off right here on this 5-minute bar. What you're looking at here is between these two bars, you're seeing an anomaly in the marketplace, which tells me that this is a fake move down. So you have 1,938 more buyers than sellers in this red down bar, and you have active buying going on at the bottom of these bars, and the COT, the most volume in the bar, going off at the bottom. Okay, so that tells me it's an anomaly. In an uptrend, this is a fake move down. Next bar, fake move down. You have sequential decline at the bottom, COT at the bottom, and you have buyers at the bottom. Now, secondly, you have two, not one, but two levels. Actually, there's ultimately about 4 levels here that you can pick from. The 9 EMA coming right up here, the VWAP number 1, standard deviation number 1 on VWAP, or the prior day high that you can use as levels that have been pierced on your pullback. Okay, step number 3 was your long entry signal bar right here. Step number 4 is your entry trigger. Now you need a trigger. You've got the green light to take a trade. Now you need a trigger. For my entry, what I would look for on here after I see these two fake moves down, I would look to pierce the top of this bar with some aggression at the bottom of this bar, and we got it. We got sequential decline here. We had sellers declining as this bar moved up, and then we had buyers take place. We had 3 stacks in the bottom half of this, or 3 buy imbalances in the bottom of this half with the COT in the middle. We went from COT to the bottom, COT to the middle. Pull your trigger at the top of here and let it rip. Now you have a nice move to the upside. You can see on our 5-minute EMA cloud just how far this thing went. We breached prior day high and carried all the way up to the psych level and beyond of 4,600 to the next target. Now I didn't hold it till 4,600. I held it to right about up in here and got out. But still a great move, about a 7.5-point move on the S&P 500. But this is how you read order flow in context. That is your ultimate guide to taking a continuation trade. Hope that helps. Good luck. Happy trading.
If you like this and you want access to the tools, check out NinjaCators Fast Track with the link below.